Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Okay, well, it has been quite the week, guys. We had the US presidential debate last night. I'm sure that had some kind of crazy record viewership, as did the last one. Still definitely a toss up in the polls and even on Polymarket about who will be the victor in 2 months. Only time will tell. In other news, Sony, the electronics company, is gearing up to launch their own L2 called Sonia. They are working with a bunch of different providers in the space currently. Doesn't look like there's a launch date yet, but could be very interesting. And a lot of people are all eyes on the Fed meeting, which is next week. So that's all, kind of in the macro landscape of things. But as always, we have some tokens to talk about. So we will jump right in. Okay, so to start, we're actually going to talk about Friendtech. Now, if you've remembered, I have talked about Friendtech a few times on here, especially lately. They've really had some issues, unfortunately. This week specifically, Friendtech effectively shut down with the founders and the team supposedly, according to sources, nabbing about $40 million in the process. So, like I said, we've kind of discussed Friendtech before here. They've really had a bit of a wavering roadmap. If you recall, they wanted to launch FriendChain. They wanted to move off base. They have done a lot of flip-flopping. It does seem, however, though, that the team has basically given up on the project entirely. According to them, they transferred the contracts for the Friendtech platform to a null address. So essentially what they've done is they have taken away their own and anybody else's ability to make modifications to the Friendtech protocol in the future. And while that may not seem like a big deal, a lot of people really did believe that Friendtech was, kind of great start, like a great proof of concept, and it really had a lot more to be built on. But by kind of just saying that we're not going to make any more improvements, they've effectively given up on the project in that sense. So definitely a huge disappointment, especially as, this product, really caught fire just over a year ago. It was like last August. And it was like one of the biggest applications on Base, Coinbase's layer 2. And, I think it had a lot of promise and unfortunately does seem to have kind of just wasted that at this point. The move, again, has really infuriated the community, rightfully so, since the project specifically netted about $80 million in fees from using the platform since launch. But about half of these fees have gone to the development team. So as I mentioned earlier, they're basically walking away with about $40 million. Meanwhile, holders of the Friend token are down 99% since the token launched. And they even saw the token dip as low as 30% on this announcement this week. Unfortunately, there doesn't appear to be much recourse for token holders in this case, as Friendtech did not have a DAO or any token holder rights. Friendtech is down 27% for the week. Okay, next up, we'll talk about Euler Finance. Slightly happier news for these guys. But so Euler Finance is a DeFi lend borrow product. They launched their version 2 this past week, which is basically building on their current product suite and offering even more options for users to structure their loans and manage risks. I won't go into all the really specific things that they're kind of coming out with because they are a more complex DeFi product. But they basically are allowing multiple types of lending. So where Aave allows uncollateralized just over collateralized lending very generally, they're going to allow over collateralized lending, isolated pools if you want to have some really more higher riskier assets not be pooled with others. You can have fixed rate loans and variable rate loans and a lot of other features like that. They're also going to be supporting any collateral type. Crypto, RWAs, even NFTs can be used on their platform for collateral. So some cool updates for them, but the V2 is actually a relaunch of their V2, which if you recall was actually launched in early 2023. And they were actually exploited almost as soon as the V2 was launched for $197 million, a non-insignificant amount of money. In most cases, honestly, when an exploit of that magnitude happens to any DeFi protocol, a lot of the time they end up not really having, it can be the end for them. They lose TVL, customers, people don't really trust them again. So Euler really had to earn back the respect that they got from the community in this sense. So they went on a huge, extensive audit process in preparation of this new launch. They did 31 audits from 13 different firms, and they even had a $1.25 million code audit competition, which is all considered the largest audit to date within crypto. So fingers crossed, rooting for these guys to not have any more issues in the future. Unfortunately, the token is down 15% as people tend to, sell the news on these types of events. But hopefully we will see better things out of Euler in the future. Okay, next up, we're going to talk about ENS. So ENS or Ethereum Name Service. Yesterday, quick background on ENS if you're not familiar with them. They basically provide Ethereum domain names to be used in place of a wallet address. So instead of providing somebody your giant long public key, you would just say, oh, I am Katie.eth. And then they can send that, they can put that in the address field and that'll send to them. So ENS has been around for a few years. They've been wildly popular. A lot of people own ENSs. But yesterday they announced that they are going to be used on Venmo and PayPal. So both Venmo and PayPal do have crypto payments available as an option. And this integration is going to be pretty simple for users. Instead of entering that long public key address to send crypto, they can instead use someone's ENS. And they're also going to have like address book features for people to save that ENS used. So definitely some more flexibility and bridging of that Web 2 and Web 3 world that we're seeing. And definitely a great way to expose folks to crypto in that way. ENS, though, is only up 1.6% on the week. Okay, last up, we're going to talk about Atom. I haven't talked about this one in a while here. It's definitely fallen into a bit more obscurity as of late, but they've had some fiery debates in their governance form the last few weeks. So Cosmos, which has the token Atom, they're the interoperability layer 1 protocol, essentially. There was a proposal that was put out about 2 weeks ago titled A Declaration of No Confidence in the Interchain Foundation Leadership, a Call to Action. So basically, the Interchain Foundation, which is the nonprofit foundation supporting Cosmos development and overall direction of the project, essentially got called out for not providing financial audits or any kind of accountability for their spending and their roadmap. So the proposal specifically requested financial audits of their spending the last 6 years. And a lot of it's just been born out of general frustration within the community. Cosmos, unfortunately, has really failed to meaningfully grow market share and keep up with, other big interoperability projects or even layer 1, ecosystems such as Solana or even, AVAX. And so, and that's been reflected in the price of the Atom token. So the community has really not been happy. So the proposal ultimately passed, although I would note that 46% of the voters actually just abstained. So it did ignite action though, because the ICF pretty much right after this published a monthly treasury snapshot for the first time ever, and they've promised to provide more frequent updates. So we'll see how this goes. Maybe this changes the shape and future of the Cosmos ecosystem. Only time will tell. But Atom is up 2.1% for the week on this. All right, guys, that's all I have for you this week. Thanks for tuning in. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's diving